Hey everyone, welcome to Smart Investing. This is video number 4 out of 6. I'm gonna apologize in advance because my wife is coming home soon and my daughter's coming home. She's picking up my daughter from school. Uh, I'm not sure if I'm gonna upload the next 2 videos. I'll try to do the next 2 videos. If not, then I will make that up for tomorrow and I'll add them on. I know I promised the 6 for today, but apparently I'm just not sure. I already know when they get home, it's gonna be a whole mess when my daughter gets home. I gotta do some daddy duties. And I'll try to get around it, but if not, then again, I apologize in advance. So, anyhow, it is close to 5:30 p.m., June 19th, 2023. We're gonna go over these 3 stocks that I have for you guys today. First one up that I have is ticker symbol OCN, Aquin Financial. We have here the price at $29.44, 52-week high, 52-week low of 22 low, 37 high. Decent range for the year. Market cap is at 224. Volume is at 29K. Very, very low. Doesn't look like a day trading stock based off the numbers. Had decent range, but based on the numbers overall, doesn't look worthy of it. Earnings per share is negative. PE is awful. Price to book is showing very undervalued. Price to sale, very undervalued. Last 5 years have lost 55% of its value. And for the past year, it has gained 17%. This is not year to date, just so you guys know. So it's not from January all the way until now. It's exactly from the date of. So from June 19th, 2023, which was today, all the way from June 19th, 2022. So it's pretty accurate and very, very specific on dates. This is a very weird chart. Look at these whipsaws, up, down, then up again, then down, then up. Then it's slightly going down, took some time to go down. Then another shot straight back up, wasting no time. It took a minor dip and it jumped right up again. Then it took a major dip right after the earnings in March and dipped from there. Try to shoot back up for a few dollars, then it's slowly going back down, then it's trying to shoot back up again and it's staying flat. It looks like the pattern that it might go back down again. It's actually battling its 200 EMA. So this is a lot of chop. I don't really see this stock doing pretty good. Again, the last 5 years looking pretty flat. It doesn't even look desirable to even jump in this stock. I think the highest has been, look at this. This was back in 2014, $915 for a bank stock. And then fast forward all the way almost 10 years later, actually 9 years later, and it's just horrible. So there you have it. Technicals look choppy and again, not even worth it. And we're going to move on to the quant ratings, see what they have. Whoa, that is pretty high for quality. Overall rating of 5 and then quality is 9.3. No income, which is very, very interesting. That can give that rating for growth a little bit higher if there's no income. So basically, the points for income go into growth. So that's actually a good thing. But the thing is that uh, it's gonna be hard for this stock regardless because it's still a small cap company. Again, only at 225 million, and they're battling actually negative earnings right away. This is just awful to see. I mean, they posted negative numbers in Q4 2022. They're barely posting positive numbers. I mean, they're battling basically 4 quarters. Sorry, 4/10 of a percent. And the next one for the earnings estimates is for 44 cents. I don't know what's gonna happen. I'm not interested in the stock really, just by the numbers. But we're gonna go through them anyway. ROA was negative in 2018, 2019, and 2020. Slightly positive into 2021 and 2022 for their return on assets. You have some very weak numbers for return on equity. Earnings per share, the last 5 years, the first out of 5. In 2018 was negative. 2019 was negative, even more negative. And then in 2020, negative again. 2021, 2022, they posted decent numbers. But again, that's because a lot of money pumped into the system. So again, any company looked like, like a godsend, to be honest. And once and for all, I think this company is starting to it's trying to gain momentum, but it's just, I think it's just ready to go. Surprised it's still surviving. So anyways, net margins, very, very weak. These are insanely high debt levels, more than your average. 2022, barely posting positive gains. In 2021, just barely. I mean, they're literally just hanging on by a thread, literally. Cash flow, even if it's positive, these guys are still just hanging on by a thread, really. Operating cash flow is at 173, so we're looking at 160 left. So 10 million in cash flow. It's best not to even give a dividend. They have a lot of work to do. These guys are struggling, and I don't even know what else this company can do. So, I wish them luck. I mean, I think the only way for them to survive is pretty much getting gains, hopefully, and just hoping to stay flat and just try to get gains as little as possible. But if this bank fiasco continues, then this company is definitely next to go. So definitely no to this company. If you're betting on the downside, maybe this company will be good for it. But for the most part, short term or long term, the company is not doing so good. So moving on to the next one, ticker symbol VLY, Valley National Bank Corp. You want to look at the 5-year and look at the market cap real quick. So share price $8.32, market cap at $4 billion. Definitely by Wall Street standards, pretty respected just by the market cap. And as we can see, like I always say, based on the standards, looking at the volume, very high volume at 9.13 million, telling me that this stock is very, very active day to day, that it has been trading day to day. Now, 52-week high and low, we have a difference of not even $10. which makes it very difficult to trade. But I don't know why people trading it. Maybe they only want to earn like 3 cents, get in, get out, and that's it. Call a, for sure deal, and that's pretty much it. Gain pennies on the dollar. It's nowhere near close to its 52-week high, so it still has room to go up there. But again, uh, it would have to break new highs in order for people to be interested. Dividends. This dividend only pays 44 cents for the year. Earnings are 1.15. Awful earnings. PE is at 7.24. Price book is at 0.64. Telling me that's undervalued. Price to sales 2.1. I forgot the ratio for that, but I'm just showing you guys anyway. For price book, if it's under 3, typically it's a decent deal. Well, it's a really good deal. If it's in the 2 range, or I'd say 2.5 range, it's still a good deal. When it's around 2.5 and the 3.5 range, you're getting a fair deal. Anything above 3.5, I would say, then it's starting to be in overvalued territory. So, with that said, we're going to move on to the chart. So again, these numbers look pretty active, but still fundamentally, they look horrible. Looking at the chart on the 5-year, you see these big moves up. Well, first you see this big move down, this big move up. Staying flat, then it dropped down, then it dropped down again in 2023. Small move up, and that was pretty much it. Hasn't really done much since. Even on a lower time frame, still again not doing much. Nowhere near close. It's 200 EMA. I don't see much potential for it. I'm gonna move on to the fundamentals real quick. Analyze that. Quant ratings. Highest quant rating is value. Second place was growth, so value takes it. Obviously, cheap stock, but again, not even worth it. Overall rating is 3 out of 5. I don't really know. They're trying to keep it alive by day trading it, or for some reason, it's probably in ETFs, or I don't know, maybe it's at a good deal because maybe some custodians want to grab it in ETFs or whatever the case may be. But it's really active for the past week. At least I can say that. I don't know if it's active for weeks or months on end, but from the information that I see, it's a pretty weak stock, but it's just pretty active. Moving on to the estimates and earnings and more fundamental deep diving. So we have here some earnings. Earnings are being on the downside, slightly declining. They have met expectations in Q3, but in Q2 they have missed, and then in Q4 they have missed. In Q1 2023 they're starting to miss by a wider margin, by a wider gap, if you can see that. Then they are actually still lowering their target for their estimate for Q2. I'm going to skip all those key indicators because I don't think it's worth it anyway. Net income, that's actually a nice looking chart, actually. I'm not looking at the percentages, just looking at that nice line going straight up. 5 years in a row. Okay, so that's pretty respectable. I would like to see that in the revenue, which looks okay. Operating income, it's not going to show me. That's already expected. So I will give them this. The net income and their revenue. The income statement, it looks okay, actually. They look pretty decent. I've seen worse, but they're pretty average. So I think I'm going to take a look at... let me see. Their debt is at 88%. Let me take a look at their margins if they're doing income okay and revenue. I'm actually kind of shocked. They actually have pretty good margins. You see here 25% in 2018 at least, almost a 28%. They're maintaining that 25% range. Even in 2020, they gained a 30%, 34, 30. So the past 3 years, at least a 30 percenter in that range, it's pretty good actually. What was their market cap of 4 billion? And they're missing estimates. This one ain't too bad. Their balance sheet, 57 billion, 51. So obviously 88%. I think this is gonna be the determining factor. Uh, if they have positive cash flow, I think this company will do okay. Um, I wouldn't say they need a lot of work, but they need very minor adjustments. So I guess management is doing okay. Cash flow, we have, let's see, 1.4, 1.4, so 5, 5.7, 5.7. So they're down $1 billion. They're down $1 billion. So they do have work to do. They do have work to do. They're basically breaking even. I wonder, okay, for the past 5 years, they've been doing okay, but again, they're having cash flow issues. It almost seems to me as if um, fundamentally they're doing okay, but when it comes to investments, they're just making wrong investments. So that's what's really killing them. Um, it has to do a part of management. So I don't know if they have investment advisors for this bank, but if they do, they're doing really bad. Because from what I'm seeing, the numbers are actually telling me otherwise. The numbers are actually doing a little bit above average, like between okay and average. If I was to rate it um, out of 5, I would rate this a little above 3. Let me see. Um, Let me go back real quick to the quants. If I was to rate the highest rating for this, I think the most important for me for any stock would be the quality. I think the quality for this stock would actually, I think I'd rate it pretty high. I think I'd rate it between a 7 and an 8. I think the only reason it's below a 9 or a 10 again is because of that cash flow issue. That's the only thing that's holding them down. But the income and the revenue looks good. Everything else looks pretty decent. The technicals look okay, but again, it's that investment aspect. So just because of the cash flow issue, I'm gonna say no. They really just need minor adjustments just to work on that cash flow. Hopefully they can beat estimates, and hopefully that can be the game changer. Uh, if possible, I think once they beat estimates, and I think even if they blow out estimates, even just a little bit, hopefully I can turn around and they can gain that market share and gain some capital off of that, and hopefully gain some momentum. So I wish them the best, and I wish them luck. I wish them success. Hopefully this company can turn around because it just needs very minor adjustments. They're not doing too bad actually. So last stock that we have is VBTX. VBTX market cap is at 1 billion. So we have here volume is pretty active. Pretty active. 52-week high and low. Decent range. Earnings They need some work. Price book, very undervalued. Price to sales. I forgot the standard number. We're gonna look at the chart. Looks awful for the year, big drop. Then even for the 5 year, looks really bad. I'm gonna move on to the next analysis part. Highest rating was value. I can understand that. And next one was close to it, was growth. So value and growth. So it's looking like a cheap growth stock. That's what Webull has it. I don't really see that. Yeah, it has some volume, but some numbers keep it out of whack. Yeah, they have 52-week high and low, but again, for the banking sector, it just makes it really challenging. And again, it's just a lot of competition in the banking sector. If the banking sector actually collapsed, that would actually be a good thing, because then you can actually tell who are the winners and who are the losers. But Wall Street doesn't want to do that. They want to hang on to it for a little bit longer, wait it out, gain some money as stocks are going up and some stocks are going down, instead of everything collapse in that sector, and then bet their way down and try to collapse that, and then let the market play itself out. But apparently, for some reason, the federal government, the feds, and everybody involved with that third party, and again, Wall Street as well, they like to play victim and want to be saved and rescued and bailed out, which shouldn't be the case, because I don't consider that capitalism. That's just pretty much, getting the bailout and being saved by Uncle Sam all the time. And it's just like a rigged casino, pretty much. There's no, I know the market is not supposed to be fair, and it's somewhat manipulated, but again, it's not, anything and everything has consequences, and it's just not showing the consequences. Sooner or later, things are just gonna break down. The longer you hold on to it, you're just making it worse instead of solving the problem. So anyhow, looking at like I said, the analysis was for the value. I don't really see it like that. Estimates have been up and down, kind of choppy, up and down, and starting to go up again. They had mixed results here. So they missed in 2022. They beat, then they missed, then they missed again. And we're going to see here, what do they have for their annual? It's not showing me. It's pretty much lagged probably. Revenue looks decent. Those numbers for their income look choppy. Balance sheet, pretty typical. Lower than their peers, I would say, 88%. Cash flow is where it's at. Let's see what they have. So they are actually, let's see, negative cash flow. So we're going to say no to this stock as well. A big no. So there you have it. No to all these stocks. And that is my answer. So thank you guys for watching. I'll see you guys in a few hours, hopefully. If not, I will see you guys tomorrow. So I might owe you guys 2 more videos, which will be uploaded extra for tomorrow. And I'm definitely going to make the shorter video. So stay tuned, guys. I have a whole bunch of videos this week in the banking services sector. Again, comments, questions, suggestions, requests are always welcome. Thank you guys for watching. Have a good day. Markets will be open tomorrow. I will be on tomorrow making videos, gathering information. So again, thank you guys for watching. I'll see you guys real soon.